Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay.
Hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? What's going on? B-Rad Cooley, you're back in the house. What's going on? Ski Racer 55. Vincent, how is everybody doing? This is live. Today is January 4th, 2025. Welcome to Al Stock Trades. All right, so now we usually, when we do these types of analysis in the future going forward, we're going to be restricting it only to the folks that are subscribed to our lifetime access and potentially our subscription-based models, because there's a lot of computational model that goes into this. So today we're going to be releasing it for free, right? To serve as a two-pronged approach. One is to show the world kind of what hedge funds like to do. More so these graphs, not so much this. This is an easy calculation, right? And to show exactly what hedge funds do on Wall Street and how they're able to understand kind of a stock price movement direction more from a long-term perspective. But two, for our current members to actually understand what the hell these graphs even mean, right? Hey, I just got divorced, but we'll keep all my CLOV stock. Oh, David, what's going on? Oh, I'm so sorry. I'm so sorry for the divorce, man. But hey, big brain move over there, right? Keeping your CLOV stock, right? I mean, I tell my girl how much we made on Clover and whatnot and all these great things. You know what she does? She's like, cool. And she just walks off. I think this is like a synonymous reaction amongst all people. But hey, they don't know what intrinsic value is. So that's pretty good. Cheers to that, ladies and gentlemen. All right. So let me drink some coffee here. I'm actually finally drinking it at an appropriate time, right? But we're going to go ahead and do these analysis. I went ahead and posted it on Twitter and Reddit. I'm just going to read it off of Reddit. I find this very funny because I posted this crazy, detailed, orientated analysis, And let me just kind of let me go ahead and it's crazy. This thing gets 77% upvote. That means like what? Like 20% plus downvote. I mean, why would you downvote this? So it's just very clear. There's some interesting characters on here. Let's say maybe 10%, 20% are just haters. The other ones I feel like, or let's say 80% were haters. Those 10 to 20%, who do they work for? Right? So anywho, so this is a lot of stuff that's we're going to be talking about. Let me just kind of read you this. So we normally keep this level of financial analysis locked behind a proprietary tool reserved for most dedicated members, but we're going to go ahead and release it. Okay. This is the type of analysis you'd expect at most elite levels on Wall Street. This is not your typical retail investor charting. This is a culmination of advanced financial modeling, Monte Carlo simulations, mean reversion calculations, and intrinsic value assessments utilizing that have undergone millions of iterations and simulations. This is like big league stuff here, okay? And this is the kind of analysis that hedge funds and multi-billion-dollar institutional players use to deeply, spot deeply undervalued opportunities, which is kind of understandable why Jim Simmons hold on, guys. One moment. Sorry about that. As you can hear, the mailman or Amazon, just typical dog. It's like, who the hell's dropping off a package? Honestly, I think it's his dog food. But anyhow, so back to the video. I'm sorry, guys. Again, it's alive. You know what I mean? It's we raw dog the video, right? So okay, what's going on here? So yeah, that's how Jim Simmons, rest in peace, was able to spot Clover earlier on with Renaissance Technologies Mendelian Fund. So let's get to it. So this is a simple one. This is just looking at the mean reversion. If you go all the way back to 2020, let's just zoom in here. If we go back to 2020, I think it was a January 6 or January 10 or 12 of 2020. And if we were to take the ups and downs, this is a lot of data points, guys, right? You can just take the amount of years multiplied by 250 whatever trading days. Plus, we get a mean reversion at around $4, right? $4.50 plus. So, at $4.70 right there. So, I think it's the mean reversion is around $4.90, I think. But we're headed there. We're about to head towards that mean, and then plus or minus the standard deviation, which we'll calculate, right? But as you can see, we're headed towards that mean right there. So, nothing too much. You can just read it. We analyze Clover's entire price history, and it's since its inception to early 2025, the daily closing price, and calculating the mean reversion levels. Historically, prices tend to revert to the mean. It's near that 449 level, give or take. But the big one here is the standard deviation curve for Clover Health. So this is a standard deviation, and what you'll find here is that the mean price, which is in red, is at $4.50. The green price is the $3.29. Now, for folks that don't remember, I had to rerun the simulation. If you go ahead and look at Clove right now, it's currently trading at 329. So then that's where it's at right now. This is the most accurate, right? So 329. So here's the mean, right in the middle. So we're definitely going to pass that. Now you have two levels of standard deviation. Obviously, 35 cents is obviously not going to happen. But the plus, this one standard deviation forward is $8.63. So you can see there's a big discrepancy in price movement versus, for folks that know standard deviation, you guys know what I'm talking about, right? So, there's a high probability, if Clover was to move, you can see there's just huge price swings, which is how we went from 60 cents up to pretty much, that we pretty much moved half a standard deviation, which was 400% from 60 cents. So essentially what this basically is telling you is, because it's such a huge range, once Clover does start to get back on its uptrend, you are going to start to see another jump, right? The question is, what is going to give that jump? What PR release is? What insider buy? What could it possibly be, right? So there it is. So now let's go ahead and take a look at the Monte Carlo simulation of the intrinsic value DCF. So when we do an intrinsic value, we usually just want to run it one time. So let me just read this so we can get it. So we ran this 1 million times. So we ran the Monte Carlo simulation on the discounted cash flow model to determine Clover Health's intrinsic value per share. Now we used strategic increases of 9.33%. And an analyst increased to 16%, which was on the lower end of what analysts were expecting in 2025, right? We didn't use 18% or 20%, 25%. So the mean intrinsic value is $11.65, and the most likely range is $8 to $15. Now, we calculated in our price target, we did anywhere between $4.50 to $9. So you can again take this, from different levels of angles of how to do an intrinsic value, but this is a rightly skewed distribution that the majority of the intrinsic values fall far above the current trading price, indicating significant undervaluation. There's a small probability of extreme high value and high values, but even the most conservative cases, Clover's trading well below its fundamental worth. So let's go ahead and kind of spend some time on this. So we ran this model 1 million times, right? Which is kind of insane, right? And this is the mean intrinsic value at $11, and this is like $20, and I could say half of this is 10. Clover's trading right here, right now, right? And you could see, there's a high probability. I mean, if this is like 11, let's say half of this is 10. I mean, it's kind of tough here. This is like 10, and this must be 5. So it seems 6, 7, kind of where that price target is that analyst projected around $6 seems like the case that we might go to probably sooner rather than later. But it's important to know that the simulation and Monte Carlo did pick up on some aberrations, which we'll discuss. Look at these potential prices here, right? Look at this $40 price. Look at this $60 price. Look at this $80 price. Look at this $100 price. Look at this $110, $120. So the probabilities are low, but based off of the given data that we have, it was able to pick up on these aberrations. Now imagine once Clover does start to change, it gives us more data, and this does become fruitful, and we do see these increases. I mean, we did see the proof of concept in 2024. Then if this thing does increase, then these probabilities will probably become active. So which is pretty insane. And you could see, again, this is dollars, right? So this is like $20 here, $40, $60, $80, $100. So it's interesting to look at this from this perspective. Okay, let's go ahead and close that up here. Okay, so now let's go down here and let's look at the Monte Carlo simulation for Clover Health. This is future projection. So let's go ahead and read this. Okay. So we projected Clover's future price path over 252 trading days, 1 year, using 1,000. This is 1,000 simulations. The light blue lines represent various possible price trajectories, factoring in historical volatility and average returns. The mean reversion price of $4.49 stands out as a likely target, which is in red, right? That's the mean reversion, right? The current price is $3.29, sits well below the mean and most projected paths, suggesting strong upward potential. Now let's go ahead and click on this. So you could see, though, you can count these lines. They're lightly blue, so it's hard to look at them, but you can count them. 1, 2, 3, 4, 5, 6, and you can divide the probabilities out and look at, because this simulation was ran 1,000 times. So obviously it's highly likely, as you can see, every simulation. I mean, think of Doctor Strange kind of doing his, trying to figure out kind of how Iron Man is going to save the world. You can see the most highly probable, the most dense, is anywhere between, the mean price here at $4.49 all the way up to $10, right? And obviously, as we go through further in time, we're going to get closer, but you can see there are these aberrations. I want to say maybe I don't know how many. I mean, somebody count how many lines of this. Is this. I'm not too sure if he's not affirmed yet. Again, I don't know that. I mean, I only know what I know, and when it comes to the Senate stuff, I'm not that great politically. I don't know, right? Uh, I did see the screenshot, and I'm very excited. I mean, it does sound pretty cool, but I don't know if it's finalized. I don't know. I don't know. That's something. Yeah, I'm not too sure. But this is what I do know though from here is, guys, listen. This is price. Like this is $70. Like you could see these aberrations, these potential movement. I mean, this is the probability is low, but you can see it like it can happen. It can. I mean, it does. It and a lot of it. I mean, look at here. There's a lot of concentration. I know. I know there's a lot of concentration here. There's a lot of concentration here too. You could calculate the probabilities and then use a standard deviation and all this, but you could see. I wouldn't be surprised that we get near 10, near anywhere between $5 to $10, right? So you could see kind of where we're headed. And, as we go, so this is like this year, right? The protection. And then you obviously have the price targets from analysts, which is above, $4. So as we go, a month from now, 2 months from now, 3 months from now, we're going to get obviously, more data, and we'll be able to figure. Obviously, we're going to figure out what the prices of the stock is going to be in terms of reality. But that's really good. So we ran through a million simulations, and they're just kind of reiterating here. If Clover reverts to its mean, it's 36% gain from today's price. If Clover hits its intrinsic value, it's approximately 255. If Clover reaches its upper range of the DCF, it's anywhere between 400 and 500% gain. So this is pretty cool, guys, right? And I hope that hope you guys like it. We've seen this before, and again, I recommend watching the video yesterday. I talked about support and resistance lines yesterday. I'm not going to talk about it in today's video, so definitely check that video out. But we've seen this disruption, right? Blockbuster to Netflix, BlackBerry to Apple, MySpace to Facebook, Kodak to Canon, Borders and Bookman or whatever to Amazon, Marriott to Airbnb, taxis to Uber, to ultimately now robo-taxis, and now potentially Humana to Clover Health, right? So this is disrupting in real time. In fact, people are already starting to talk about this. Humana Medicare Advantage may fail without regulator intervention, threatening core business, right? And then yesterday, for Chamath's All In podcast, recommend looking at. I don't have a specific episode because it's like their prediction. I would have put the episode in, but if you look at it here, Chamath said, what's his market outlook? He said the biggest stocks in the S&P 500 could shrink below 30% in terms of their market dynamics, and like the Magnificent 7 or 8. Then Jason adds, dispersion happens. Money flows out of the concentrated large caps into other stocks. Now, why I like this is because this aligns with the idea that small caps, after years of underperformance, may finally take the lead, which is, you can actually mathematically do that. And also, Toy did also part of that disruption with Android, which is kind of funny. Exactly, right? Now, also, if you look at gross margins, analysts, interestingly, are speculating that gross margins are going to be 50 to 60%, which is quite amazing, because I think that's them factoring in SaaS, subscription as a service. Again, analysts for 2025 are factoring anywhere between a growth of 16.2% to 18.39%. Again, that 8 jumps that to a 9, so it's 3.9, right? Again, institutional investors have been selling, but now finally we got an uptick. Now, to make sure this uptick is statistically significant, we added a 5-period simple moving average, and you can see it's above that line. So we may have started stage 1, which is that hope and disbelief. Institutions are also feeling that as well. So, and now people are starting to state that this is a business turnaround, right? Given what Ari was saying. So it's very clear institutions are showing us this through their SEC 13F filings. And then if we were to zoom in specifically on this, you can basically see there's a MACD signal for institutional ownership, given that the MACD is about to cross into positive territory. And if you look at the 5-day period, simple moving average, exponential moving average, and trend line, both the institutional ownership has increased in over these types of resistance levels. So, and if you were to graph the Clover sentiment, which is, again, is all data that we've basically collected and we've analyzed, you could see the bearish signals are down here and the bullish are here. And you can see, if you were to graph the stock price, you can see the stock price is synonymous to the sentiment, giving that people are writing positive articles and speaking highly positive of Clover, right? And again, if you were to analyze Andrew Toy's people that like his posts, you could see that other providers in the Medicare Advantage space, like Elevance, ELV stock, and Blue Cross and whatnot, are liking it, and CVS as well, which, could potentially signal that these are potential clients for Counterpart Assistant. In fact, Clover is ranked top 20 and top 4, and also now top 1 ranked in the industry. And the industry, with like all these industries that it's ranked against, they've lost a total $326 billion. So a lot of money has left these type of stocks. And, Humana is free cash flow negative. So they're losing a lot of money, which is why, they're at danger of essentially dying. And if you were to essentially look at the ranked for Clover, it's ranked top 1 over Molina, United Healthcare, Alignment Healthcare, which a lot of hedge funds like, and then also Humana, and Bright Health is better than Humana now, which is insane. So, you can see there's a lot of potential here. Okay, a lot of potential for Clover Health, right? Al, boys, we love you in Brooklyn, bro. 2025, let's go. Al, stock trades for life. What's going on? It's been returned to the Senate. They have to resubmit. Most likely won't until after January 20. Return to the president. Exactly. Right. Yep. So there it is, guys. So again, if you like what you see and like the data that we have, I hope now you're going to understand why the lifetime access is going to be $5,000 plus. So, now it's $700 off of its current trading price, so that you can get this literally below $2,500 lifetime access. So, for folks that are interested, we do have a coupon code. And you can see the level of analysis and data we have is pretty superior. You can't really find this anywhere else. Hedge funds are probably looking at us now, right? So, ladies and gentlemen, I hope that you like what you see, and this is very bullish. So there it is. Happy Saturday, and I'll see you on the next one.